Hey everyone, this is Ryan Kasper with your weekly market rundown, bringing clarity, connection, and a little honesty to what's happening out there. Last week was a quiet one on the data front, mostly because the ongoing U.S. government shutdown kept the usual stream of economic reports from coming out. Ironically, that gave markets a little breathing room until Friday. Equities around the world were holding steady, and then we got hit with a round of trade tension headlines. Talk of new tariffs on China, restrictions on exports, and some retaliatory moves from Beijing. That was enough to send stocks sliding into the weekend. The Dow fell about 2.7%, the S&P 500 dropped 2.4%, and the Nasdaq just over 2.5%. It was the most negative week we've seen in a few months. Bonds were a mixed story. Treasuries moved higher as investors looked for safety, while credit spreads widened a bit and riskier bonds sold off. On the commodity side, gold stole the spotlight, hitting a record $4,000 an ounce, thanks to growing global uncertainty and a weaker yield backdrop. Oil slipped back under $60 a barrel as demand expectations cooled. On the economic sentiment front, the University of Michigan's consumer confidence numbers barely budged, basically flat. People are still worried about prices and job prospects, but the shutdown itself doesn't seem to have shaken confidence yet. We also got a peek inside the Federal Reserve's September meeting minutes. Most members supported the rate cut we saw, with a few arguing for patience. The tone leaned toward more easing this year, not less, especially with the job market softening and inflation still running hotter than they'd like. In other words, the Fed knows the economy's slowing. They're just trying to manage the descent. Now, the question of the week. The SEC's move to allow ETF share classes for mutual funds. What's the big deal? This is a major industry shift. Vanguard built this model years ago under patent, and now that it's expired, everyone else can join the party. In short, it means fund companies can add an ETF share class to an existing mutual fund, potentially cutting taxes for investors, improving liquidity, and reducing trading costs. Dimensional Fund Advisors was first in line to file, and more than 80 firms followed. This could reshape how portfolios are built, especially for taxable investors. Mutual funds might finally have a way to compete with ETFs on tax efficiency, something advisors and investors have wanted for years. So as we head into earnings season, markets are juggling three things: slower growth, shifting policy, and evolving product innovation. None of that is simple, but it's exactly why staying disciplined and risk-aware matters. I'm Ryan Kasper. Thanks for joining me for this week's IPC update. Stay sharp, stay curious, and as always, let's keep bringing truth and clarity back to investing.